Bitcoin just dropped 6.5% in the last 24 hours. The fear and greed index is sitting at 18, that's extreme fear. The market is in extreme fear. And that's exactly when fortunes are made. If you're not paying attention right now, you might regret it. Let's break it all down. Welcome back to ZeusByte, your daily source for breaking crypto intelligence. I'm your host. Let's get into it. Bitcoin is trading at $67,254 as of today. That's a 6.5% drop in 24 hours, with $55 billion in volume. Total market cap, $1.34 trillion. That might sound scary. But let's zoom out. Bitcoin has dropped over 10% 12 times since 2020 and recovered every single time. The question is not if it recovers. It's whether you're positioned for it. Key levels to watch: support at the $62,000 to $63,000 zone, held twice this month. Resistance at $73,000 to $74,000, the 20-day moving average. And the big one, $99,500. Bitcoin has failed here 3 times. A clean break above that level changes everything. So what's actually moving the market right now? First, Bitcoin ETF flows. Institutional money is actively accumulating. The fear and greed index is at 18, classified as extreme fear. At this level, historically, Bitcoin has returned an average of 47% over the next 90 days. Warren Buffett said it best: be greedy when others are fearful. When fear and greed hits these extremes, the next 30-day return has averaged over 18%, but the downside risk is real too. Let's look at what the smart money is doing, because price alone never tells the full story. Long-term holders, wallets that have held Bitcoin for over a year, have dramatically reduced their selling pressure in recent weeks. That's historically one of the strongest buy signals in crypto. Miner capitulation? Also easing. The sell pressure from miners has dropped over 80%. When miners stop selling, it means they expect higher prices ahead. Exchange reserves are declining. Less Bitcoin on exchanges means less selling supply. Combine all 3 signals, and the on-chain picture is quietly bullish. Here's what most retail investors completely miss. While headlines show a price drop, institutional flows tell a different story. Bitcoin ETFs just recorded $458 million in net inflows in a single day. BlackRock's IBIT alone, $263 million. Fidelity, $95 million. These are not panic sellers. These are the largest asset managers on the planet increasing their Bitcoin exposure at current prices. Kraken just gained access to the Federal Reserve's payment system. ICE, the owner of the New York Stock Exchange, just invested in OKX at a $25 billion valuation. The infrastructure being built around Bitcoin right now is historic. So what happens from here? 2 scenarios. Bullish case: macro stabilizes, ETF flows sustain above $300 million per day, Bitcoin reclaims $73,000, target $85,000 to $100,000 in Q2 2026. Bearish case: geopolitical risk escalates, support at $62,000 breaks, potential downside to $55,000. Bloomberg ETF analysts estimate 2026 annual inflows could reach $20 to $70 billion. If Bitcoin pushes toward $130,000 to $140,000, that upper number becomes very realistic. That is the full picture: price action, on-chain, institutional moves, scenarios. If this gave you an edge, smash that like button. Subscribe for daily breaking analysis. We drop it the moment it happens. Comment below: are you buying here, waiting for lower, or already out? I read every single comment. Next video, the one on-chain metric that has predicted every Bitcoin bottom since 2018. You do not want to miss that one.